Hello, how are you doing? It's good to see you. Welcome along to our New York Open live stream here at FTUK. It is Thursday, the 31st of October, and a very happy Halloween to you if you're waking up in the United States and joining us. Hello, it's good to see you. Pretty relatively contained session, not a huge amount going on. Nice to see a bit of an uptick in the euro this morning off the back of inflation data, which came out. We'll have a quick sweep round and then I'll get on to the main stuff, which is going to set us up for tomorrow. In Europe, we've obviously had inflation data printed this morning. Came in slightly hotter than what we were expecting, 2% versus the previous 1.7%, and slightly higher than forecast. There's not a huge amount in it, but Christine Lagarde did say in Le Monde, the French newspaper, overnight that she reaffirms that lowering of rates will continue, remains prudent on inflation outlook. Our goal is in sight, but can't say that inflation is completely under control, and those statistics obviously show that. You're obviously always going to have some oscillation of either side of a number, but you know, generally inflation is back where it needs to be, around about that 2% level. Sequence of rate cuts will be determined by underlying market data in the coming months. Not expecting a recession in the euro area. Okay, that's touch and go, I suspect. Cycle of higher salaries and inflation is expected to persist. So just pay attention to the fact that we've just had that trend has just been broken now in inflation for the euro area as a whole on a year-on-year basis anyway for October, and the euro liked it for sure, definitely. If you have a look at the euro itself, you'll see, oh, bear with me, I have got the wrong chart on there. Should be it there. Oh no, wrong one. Too many buttons to press. There it is. You can see it there in front of you now. That is the euro on a 1 hour time frame. Over the course of today, you can see we've just had a bit of an uptick there of that inflation data, which just came out now. It's giving us a little bit of dollar weakness in that tone as well, but bear in mind just how far we've fallen. You know, all this really does for me in terms of rallying from here is potentially set up if we get a hawkish number out of the non-farm payroll jobs data tomorrow. That's just setting up a really nice short. You know, get your fib. I mean, the amount of fib traders that would just get their fibs across this huge, great big swing and then look for one of these key levels to short off. You know, 109.82, those late 109s are giving you that halfway back area. I mean, I'm just saying, you know, that could set up as a nice short trade for then to carry on into next week. So, you know, it's it doesn't look particularly bullish, even though we are starting to travel up a little bit at the moment. You know, I'm still strong on the dollar as a whole. Okay, so let's move on and let's look at what else has been happening as well. Just tie these comments up. We've talked a lot about the budget this week, but Rachel Reeves this morning said, said that we will have more plans to boost growth. I won't have to do anything like that ever again. Won't come back in spring looking for more money. Well, they sound like famous last words if ever I have heard them from our politicians. You're very careful when you've got to say things like that, especially with the Chancellor, because events can happen and you're going to need more money, you know. So, yeah, but with the pound itself, pretty much not really doing what we would expect, really no breakouts as such so far, as I'm sure that you are seeing on your charts. That could all change tomorrow and into next week though, so bear that in mind. Let's move on now. We've also had the inflation data, which we touched on in the live stream this morning. We've had the PCE price inflation index data for the month-on-month reading in September. That has been printed and came in line with expectations, 0.3%, just slightly ticking up on the previous 0.1%. But the market reaction, well, I mean, that just probably tells you where we are in the cycle, really, because there was basically no reaction whatsoever from the S&P 500. Let's have a look at that. And we've also had a whole load of earnings as well, tech earnings out as well, from like Microsoft and stuff, which I think have been okay. But you know, I still think that these markets are pricing in a sense of hawkishness from the ADP, from the jobs data, because that's where the main focus is going to be now over the next 24 hours. And then it's all going to be about the election next week as well. So those have to be the main drivers for me. Now, I said it all week, and you can see that we've had the dovish reaction there from jolts as the S&P 500 moved up, that stock's up, and the dollar weakened as a result of that. And you can see now we've had that ADP, and these stocks have dropped. So that stock's down, dollar up. That is what has basically been painted out on the charts. You can see it here in the price action. Now, I said all week that was my key area of where there's a huge amounts of buying in there. We need some volume if we're going to push down through there. And as yet, no, it just looks like a retrace. It looks like some sort of a pullback where you'd be looking to maybe then speculate to the long side if that was your thing. I can't see right yet. I'm not saying that we can't collapse here in the stocks. What I'm saying is I can't see where that's going to come from as yet, given what we've seen on the fundamental calendar so far. So what I would do, here's a quick tip for you, is get your Fibonacci tool over the key areas of support. Don't just necessarily put the fibs over the entire swing, isolated as well. You'd be amazed at how accurate some of that can actually be. So if I just drop this on top of there, you will see quite nicely, all we've really done in that key area of support that I highlighted, all we've really done is test the first area of that, which is the 23.6. So even if we do open up here in the middle of the range, I suspect that we could have maybe a move up to the top here at 5,800, and then that just gives us a sense of pull back down to the 32.8, which would be an even stronger Fibonacci area to aim for. And even then, you're looking at a market that is still looking relatively bullish in comparison to what we've seen so far. Yeah, it's a mixed bag as we go into non-farm payrolls, but I like the setup. I like the way that the markets are. Excuse me. Oh, excuse me. I like the way that the markets are currently set up for it. So, yeah, going to be interesting to see how the S&P prints over the course of the next 8 hours. Usually, when we're coming up to non-farm payrolls as well, you'll find that the markets, they do start to quieten down. Excuse me, from a volatility point of view. So, Friday, of course, will be busy. We will have UK housing data in the morning to keep us busy. But before then, if you are up in the United States and you're into the overnight session, then keep an eye on the Caixin manufacturing PMI data out of China. That is going to be important to keep track of. We're looking for a higher print on that. That will be 49.7 from the previous 49.3. There's not a huge amount in it, but given what we've had out of China this week, it is important context that everyone needs to keep track of. That is definitely something that I would want to. It's the number that I'm going to want to know when I wake up first thing in the morning. But of course, we are asleep here in Europe during that session. And also, as well, very important to bear in mind if you're relatively new to markets and fundamentals, and you're getting used to the cycles as you're into your proper count, and maybe this is the first proper count that you've ever had. Understand that the price action can be quite ragged at the end of the month. So today is the last day of the month. It's Halloween, and what that can mean is it'll mean that the markets get a little bit more volatile towards the end of the session. So as we approach the end of the European session, as you approach the end of the US session later on today, what you'll find is there can be a sense of volatility that is hard to explain. And it's usually because of this, and that is the month-end flows, and that is huge, great big institutions. At this time of the month, what they do is there's a certain amount of squaring off of positions that people do. And what that does is there's active buying and selling in the market, and particularly in the futures markets, which spills over into the CFD markets. Then obviously you get some ragged volatility. So if you had a good week, then you might not necessarily really want to be trading actively at the end of these sessions, simply because there can be moves that you can't necessarily explain, and this is usually the reason why. So yeah, bear in mind month-end flows. Tomorrow, of course, is going to be the non-farm payrolls. We're going to break the whole thing down in a preview for you tomorrow morning. Now, what I've done, this is a good tip if you're getting into fundamentals. Obviously, this is our theme for the week. But just keep a track of that jobs data throughout the course of the week. And I've also added in the GDP and the PC inflation as well. So you have a sense of dovishness or hawkishness to take into tomorrow. That is really, really helpful. Now, the unhelpful thing about it this week, we just happen to be doing it, is an incredibly mixed bag. We've had a dovish, a lower than expected JOLTS reading, which is dovish. That's stocks up, dollar down. We've had a hawkish reading on the ADP. That is stocks down, dollar up. And we've also had GDP reading out yesterday, which was lower than expected. And that too is dovish. Why? Because you're suppressing down growth. You need to pull back those interest rates. The PCE, obviously, was the opposite from that, slightly higher. So inflation is still a little bit baked into the system. and that's the core measurement that the Federal Reserve pay attention to. So we do have a very, very, very mixed bag. So what that does mean is it means that we don't necessarily have a clear view in terms of what we're expecting in terms of price, but we do have a clear view in terms of looking at the jobs data to find a big lean, because that could be the tipping balance, because we're going in quite square. That in itself is a useful game plan. So you see what we've done throughout the course of the week, just by paying attention, we've slowly got ourselves together a game plan, and it's not taken very long to do. That's a huge advantage when you go when you're trading an event like non-farm payrolls. It really is. So it is non-farm payrolls tomorrow, and it is the end of our fundamentals week. I hope you've enjoyed the coverage. You can still get a trial of the Newsquawk professional audio squawk service, which we'll be using tomorrow in the live stream, and you can get a 35% discount. That is on the website still at the moment on the 1 and 2 step accounts. You get the new trading add-ons, and all you need is the code NEWS35. Head over to FTUK.com/fundamentals. In fact, I can show you the webpage. If I just bring that up over here, you can see it there in front of you. That is the page that you want to get on. That has got all of the information of how the promotions work, and then you'll be able to get to the promo code from there. You can see it, which is at the top of the screen. Get your discount, get your audio squawk, 2-week trial. Start learning fundamentals. You will become a better prop trader by doing that. I absolutely promise you that. Okay. Finally, it's such a busy week with it being Halloween. Obviously, we've got a great giveaway as well. It's more of a little contest stroke giveaway. If you look in the description section of the live stream, you'll see a link. Fill that form in there and share your scary trading stories. Obviously, with it being Halloween, I cannot believe how popular this has been. We've had to extend the prize as well. We're only going to give 1 prize away. We're actually going to give 3 away now. There's been lots and lots of entrants on this, and I've not had a chance to have a look at some of the stories, but I'm guessing there's some really interesting one. Interested to know some common themes, so we're going to talk about those in the live stream tomorrow and announce the winners. But you've still got time now to enter if you want to get involved. All you need to do is click on the link in the description below, fill that form in with your story and send it in. We've got 3 prizes. The first prize is a free 10k 2-step account, and that's going to include all of the add-ons. The second prize, the silver prize, is the 10k 2-step account, and then the bronze prize is a massive 50% discount on any of the trading accounts that we've got. So that's our highest discount that we've ever done. So definitely it is worth getting involved in that. Also as well, it is non-farm payrolls to tomorrow as well. So we're looking for, that's the magic number. You need to put your guess in if you want to stand a chance of winning one of the accounts. 115,000. That is what we are looking for. And also as well, it's going to be a good one, except it's going to be slightly earlier. So our coverage of non-farm payrolls is going to be hitting the wires in the UK at 12:15, not 1:15. So make sure you are early to the table, because if you rock up at 1:30, you will have missed it. But other than that, we will be live on YouTube. It is the best non-farm payroll coverage that you can find on YouTube. We'll have the audio squawk in there. So everything that you need is right here at FTUK. Have a fantastic session ahead, and we will see you all bright and early for tomorrow morning's non-farm payroll preview.